Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, November 21, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, yesterday we talked about two things in particular. They were eating time off the clock above the 20-period moving average, and we had a gap above, which they did fill today, and we had a gap below, which they have yet to be filled or have yet to fill. Now, since we know they filled the gap today, let's go see exactly what number that came in at from a daily chart perspective. 593.35, closing print today, 593.67. So they closed above the gap, which in my mind leaves the door open to go test the underside or from underneath of this trend line. Might want to write this one down, put it on a sticky note. 598.50 is a number of importance, and it happens to coincide with this trend line. If they're up there, for example, tomorrow on Friday, I would pay attention to that number / that area. Sticky note material. We will be paying close attention to the weekly close after tomorrow's close. Where are they going to close relative to the all-time high? Where are they going to close the week relative to the trend line? Are they just eating time off the clock in a bullish formation, building energy on the weekly chart to move higher yet again? Above all the moving averages, the trend is your friend. When they were up at the highs, we did begin talking about the fact that they were getting a little bit extended from home base and that they would need to come back toward home base or have home base creep up toward price as they go sideways. They did them both. They came back to test home base, and they've yet since bounced off home base. That doesn't mean home base holds 3 or 4 days from now or 3 or 4 weeks from now. I'm just saying for now, on this particular movement, home base held the tape. How'd we do inside the numbers today? Did we have a beat on the numbers or did we not? Hold your horses. We'll get to that in a moment. First, I want to look at a couple of stocks from the Lazy Swing Trader Automagical Algo system. The system itself purchased, meaning an alert went out automatically. AMAT, Applied Materials, 168.18. Profit was taken today around 175. That's a base hit. Base hits put you in the Hall of Fame. Now we have what's called a risk-free, emotionless trade. This was one of the trades that was taken post-election. I think there were 6 or 7 trades taken post-election. 5 of them have reached their first profit target, and this is all since the election. Entered and hit profit target since the election. This is one of them, AMAT, today. Here's another one that reached first profit target today, Illumina. Entry, 131.15. Profit target above 135. It's a base hit. We're looking for base hits, and then we're looking for stretch out a double, triple, score a run, get them on, get them over, get them in. Base hits put you in the Hall of Fame. 5 profit targets reached on entries of 6 since the election. Pretty darn good. Lazy Swing Trader Automagical Algo system. We were talking about inside the numbers. We're going to start with the pivot today, 591.05, the pivot. Right of the vertical is today's activity. You could see where 591.05 is in fact an important number. Mrs. Market knows about that number. Mrs. Market continued to test that number. Mrs. Market continued to try and get above that number, stay above that number, test that number. It's important to have the pivot before the session begins from a trading perspective. If you're a trader, if you're interested in trading the market, you need to have the pivot of the market you're trading. Above on candle closes, meaning there's not much in between the next number, 593, 37, 35. It was, in fact, the gap. And you can see what happened right at the opening bell. The opening print was 593.40. They spiked it and they fell all the way back down. It was what we call a gap and crap situation until they actually had a reversal / recovery operation take place. But right out of the gate, early morning session, it was a gap and crap. The question is, did we have some traders on the short side in the live room? The answer is we did have a few, but that was of their own volition. They were fortunate enough to take the ride, booked some nice profits, and then took a ride back up in the other direction. So they, in fact, got what's called a double barrel trade. Pause the video, read the notes, go back to the chart, and double check the work. The pre-market thieves were running the market up above 591.05. We didn't have to worry early on about the pre-market thieves dipping the market down. They actually ran it up. And then let's check out some of the numbers above the gap, which was a target and resistance zone if above the gap. This was put on the board 40 minutes before the opening bell even rings. 594.15 to 595.12. How you doing? High of day happens to be 595.12 on the nose, on the button, on the money. Resistance zone 594.15 to 595.12. Right here. Resistance zone, and was in fact a resistance zone. You can see first a rejection here. They climb back up at the top end of the zone, and another rejection type of move. On the board at 0 dark 30. Pause the video, read the notes, go back to the chart, and double check the work. And if you're in the business of double checking the work, below 590 on candle closes begins to open the door for a log, which should be leg down toward 587.60. They don't have to get there, but can. 587.60, 9:37 a.m. Eastern Standard Time. And what time did they get there? Right around 10:30 a.m. Eastern Standard Time. 10:25, 10:30, right there. 587.60. How you doing once again? How you doing up here at 595.12? And how you doing down here at 587.60? Pause the video, read the notes, go back to the chart to double check the work. It's all in here. Everything you need to be successful trading the SPY, whether it's options on the SPY, exchange traded products, the ES, the E-mini, the micro contracts. It doesn't make any difference. They're directional trades. We provide a laundry list of markets, about a dozen markets each day. The Qs, IWM, which are small caps, SMH, semis, bonds, TLT, GDX, oil, gold, silver, natural gas, the dollar, Bitcoin, which is about $100. Last I checked, they got to 99 and change. If you're interested, write down some of these numbers, go back to the charts and double check the numbers against what the market did at some of these numbers. Double check the work. See if this is for you. Just to wrap things up on the spiders here using the daily chart, at the end of the day, they were up about 0.5%, $3.17. Remember, closing above the gap, which they did, is a bullish signal. It doesn't guarantee there's follow through to the upside, but if there's follow through to the upside, we talked about the next thing on the upside, it's basically around that trend line, give or take. Discussing follow through, what about Camp IWM with a $3.50 up day follow through, or 1.5%, which is also relative strength. They bounced off the former breakout area. Been talking about this one for days. Today it was essentially a gap and go by the end of the day. If you want to write down a number, 237.25 is pretty important. 237.25, that's kind of close enough right there. 237.30 is the same as 237.25. That's a number that A, is overhead resistance, and B, is a target as they get close. They're getting close. It is now a target on the upside. 237.25. Write it down. Put it on a sticky note. Below 232, 232.25. That whole scenario's off the table. As a reminder, the IWM or small caps is my favorite market leading indicator. What is the second favorite market leading indicator? They're the folks down at the transportation department. They were up 169 points today, or about 1%. Both indices, the transports and the IWM, had relative strength against the SPY. We're going to take that at face value. It's a divergence. My favorite market leading indicators were leading in the upward direction. All three were up. Everything was up today, but yet the transports and the IWM were up on a relative base more than the S&P. That's a bullish scenario. Write that down. Put it on a sticky note. What about the Q people? How about a little relative weakness against all the other stuff? Still up on the day, $1.81, about 1/3%. But as you can see here, they did not, and I repeat not with a little underline, did not fill that same gap that we find in the SPY. I find that a bit of interesting information. Are they going to gap over it tomorrow? Or, being the umpire calling balls and strikes, we have to look at both sides of the equation. Or, is this a potential failure in the making? Is this relative weakness? Is this the market's way of sending a flare up in the air saying, hey, over here, things aren't as rosy as one might believe? We don't know exactly which scenario it's going to be, but what we do know is this. One thing or another will catch up with the other thing. The relative strength exists in the transports and the IWM. The relative weakness exists in the Qs. One of these two scenarios will resolve themselves and everything will still be going in the same direction after the resolution. What about the financials? Anything material change here? Well, they're starting to break to the upside, up about 1.27% today, 63 cents. That's a pretty healthy up day for the XLF. Remember what we said for a long, long time, which is if there's nothing wrong with the financial space, there's unlikely anything structurally or materially wrong with the S&P or the market as a whole. Doesn't mean you can't have a down day or two, correction here and there, that's fine. But we're saying structurally, if the financials are fine, everything is traditionally fine. Today they were up, as they say in the trading parlance, on a little uptick in volume. That's institutional participation. It's not this kind of volume, but it was still better volume than the volume they had while they were going sideways. So when we see things like that, we pay attention. It's one of those of note puzzle piece on the table. What about good old Smash Mouth, the Philadelphia semiconductor space, which is a pretty good proxy for the tech space as a whole, up $3.56 or about 1.5% today. Pretty decent up day for the semi space into what is almost a convergence of the 20 and 50 period moving average. But what we can say is, A, they did in fact fill the gap today. The official gap here, closing print 248.18, high of day today in the SMH 248.19, 1 penny. There are no accidents or coincidences. They did not close above the gap. So the spiders close above the gap, the Qs did not get to the gap, and the SMH splits the difference, closed the gap, and closes below. What do we make out of that? We make it one candle at a time, and we need more information. We're not going to make a federal case out of the movement in the SMH, but we will note it was a positive day and relative strength nonetheless, not only against the spiders, but more importantly to the SMH themselves, relative strength against the Qs, which were up about 1/3%. Smash Mouth was up 1.47%. Of note, puzzle piece on the table. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.